Good morning, traders. Welcome to the Flow Show. It seems we're leaving the best till last at the moment for a Friday. Hope you're doing well. Morning, Kate. How you bearing up?
Hey, good morning, Ryan. Good morning. How far is it till the weekend, please, Dad?
Sitting here now, it seems like it's about a week away.
It's at least we survived until now. We're still here. We didn't blow up our accounts, so that's a good thing. We're actually doing pretty well, don't we?
Yeah, you know, these are the sort of weeks we live for. Nice volatility, lots of news, lots of stuff going on, and as long as we can navigate it safely, which I hope all our traders here are doing. Right, lots to get through, so let's crack on. I don't even know where to start. I don't know where to start or where to finish. Right, let's get through the data quickly. We had some household spending numbers from Japan, which put a bit of a blight on current proceedings, coming in pretty negative, down 6.3%. Year on year, down 2.1% month on month for January, so not very good there. But Japanese government official has brushed it under the carpet, saying the decline in household spending doesn't necessarily reflect a consumption trend. Well, that remains to be seen. Kay put up a chart in the chat room to suggest that it might do. Finance Minister Suzuki said a bit of a no shit Sherlock comment for the politicians there, that the risk that rising interest rates could pressure Japan's debt. A ton of sources stuff dropping this morning has got the yen strengthening again. Gigi first out saying hello.
Yeah, we are not seeing your screen. If you try to share, it's
I've not shared it.
It's
what's happening then? Oh, there we go. There's that.
Yeah, much better.
Cool. Right, yes. So lots of sources stuff coming up. There was that household spending data, but yeah, come on, all your calendars by now. So Gigi was saying that the BOG is considering a new quantitative monetary policy framework, and that's set to showing the outlook of JGB buying amounts. They will review yield curve control as it considers this new quantitative policy framework. So that's considering YCC as a tool as opposed to using it at the moment. They're also going to consider to keep buying nearly 6 trillion in JGBs per month under the new quantitative policy framework, which is not wholly unexpected. Even when they end easing, they're still going to be buying. They're still going to be easing after they've ended easing, because they can't just stop and reverse everything when you own over 50% of your bond market. So a very slow process, as we know, but they're getting the plan ready for the future. Sources piece from Reuters saying that the Bank of Japan is leaning towards exiting negative rates in March. So yet more comments about March becoming a possibility of when they might act. Whether we're getting these airdrops from BOJ members to get us prepped or not remains to be seen. But I think it's becoming more 50-50 whether they go March or April now, Kay, where we were thinking that March was just going to be the set the table out.
Oh yeah, absolutely. I mean, every day, nearly every 12 hours, we're getting more and more indications that they may actually be ready. Yeah, I wouldn't. It's not a base case anymore that they are just going to prepare the markets for April. It's yeah, I think it's 50-50, and I wouldn't call it like 70-30 or 80-20 yet for a definite March thing. But you know, the other day when and that was not even earlier than the day before yesterday, right? No, and MUFG is saying that they are expecting something in March, so perhaps they will be right after all.
Maybe
Yeah.
first.
Yeah, what else can we say, right? I mean, to me, it would have been like the way that UEDA brought it on over the past year and a bit. It was like really okay in April, the new fiscal year. Then it's when we are going to start normalizing. And well, actually, starting normalizing is now not the right term anymore, because that is going to be really lifting rates out of negative. YCC is apart from the name already flushed away. That should not be, unless they officially say like YCC is finished. It's always going to have some little bit of an impact. But yeah, absolutely. Now it does seem that we may not have to wait for April. And the market is trading it. Dollar yen is already 300 points lower than where we said we would have loved to start selling. But I mean, well, I had just like really tiny steps, but nothing to call even a position. Yeah, there's still room if they now the other side of the coin, Ryan and friends listening to us, is actually if they don't do anything in March now, we may see a bit of a knee-jerk reaction on all the dollar, on the dollar yen and the yen pairs, because the market is definitely preparing the move now.
Yeah, I was going to say exactly that. It's March has now become more live than it was. So really, it's March and April. And if they don't actually act in March, you're probably really going to see a knee-jerk reaction in yen weakness. But if they don't act, but the second line in the statement says we're ready to go in April, then that pop in yen pairs is going to be very, very short-lived. The market not too fussed whether it's March or April, but yeah, that is the risk. The more something becomes a possibility, the greater the risk grows that it doesn't happen, as opposed to a low risk of something happening, and that's the surprise trade. So you always, while we speak about you know, the balance of risks and what's expected, how that changes. It's so you can assess where the bigger risk lies from that event at any particular time, and it changes. As we said, March is now a bigger risk of something not happening than it was 2 weeks ago, or of something happening. So you have to know what the market is thinking going into these things. And the precursor, apparently, or the determinant, as it was stated in this story about March, was the March 13th wage negotiation data that we're going to get next week. So that could be the tipping point. That's still going to be a big day. And that's probably where the market will confirm its expectations for March or not. So again, that might be a bigger date than the actual March meeting. But the way headlines are coming out at the moment, heavy risk at the moment. Vols 9.3 to 9.35% at the moment. So we had a big jump in volatility, as you may expect. So expect dollar yen to be very jumpy, and I'm looking for I'll probably say a 4 million print in NFP to get a dollar yen rally to hit. But yeah, I'll stick that one in the hope pot, I think. Right, over to the Germans quickly. We've had some industrial production data, which is a bit better, looking a bit better there, 1% on that, though still much down on the year. Obviously, we got those factory orders yesterday, which were absolutely horrendous. PPI as well, still seeing negative year-on-year numbers coming in, not as much as expected, and a little bit of a pickup in the month-on-month numbers as well. So obviously this all feeds into CPI data and whatnot. ECB, they kept their rates unchanged, cut inflation forecasts as was rumoured before the ECB meeting. Right after the ECB meeting, or the ECB announcement, the market increased rate cut bets, and they see roughly 100 basis points of cuts in 2024. Now, just doing the sums, we've got 6 meetings left. If they go in April, that's 6 meetings for 4 cuts. If they go in June, that leaves 5 meetings for 4 cuts. If they only cut at forecast meetings, that leaves 3 meetings for 4 cuts. So I think the market is still a little bit too dovish, considering ECB members have been saying that you know, they're not looking to potentially cut at every consecutive meeting. So there's still a little bit of disparity there. Not that euro dollar minds anyway, because it's staying well bid. So Lagarde was out with a waffle saying the economy remains weak. Surveys point to a pickup this year. There's signs that growth in wages is starting to moderate. It says we're more confident about hitting the goal, but not sufficiently confident. Says the data will come in the next few months. We will know more in April, and we will know a lot more in June. And that was the kicker line. Long and story short, she's put a timeline on when they are looking to cut. And all the ECB bods have been waffling about that as well. She also said that the only underlying indicator that isn't declining is domestic inflation, and that's the important one. Reiterated that we will not wait until we are at 2% inflation target before looking at cutting. They want to see a sustained path. And then she came out with some of her unusual waffle, saying we're still in the holding season. We'll move to the restrictiveness season and then to the normalization season. Like that. Says we have not discussed rate cuts at this meeting, but have begun discussing dialing back the restrictive stance. Apparently, everything was tickety-boo with the meeting and all the opinions of the governing council members, because we didn't get our usual post-ECB sources piece. We were wondering whether the Hawks might be a little upset about her seemingly pre-committing to those dates, April and June, but they were happy, and that's been reflective in their comments since. Now the floodgates are open. 2 big hawks, ECB's Nagel, said the ECB could cut rates before the summer break, and a June cut depends on the data. He's been one of the big hawks, largely rhetoric being that they shouldn't be in a rush to cut rates, but now it seems he's coming in line with a summer cut. ECB's Hawky Holtzman, another big hawk, says a rate change may be in preparation. So they're all coming around to it. ECB's Vilroy, very likely that the ECB will cut rates in April or June. There's only 3 months difference between them. ECB's Wren says the risk of a premature rate cut has substantially decreased. We'll review the matter of rate cuts in April and June. Simcus, we are not in a rush with monetary easing, but an April cut is possible, but the likelihood is low. June is the possible month for a rate cut. Muller, we need more confidence on prices before a rate cut. ECB's Kazakhs says another hawk here, saying ECB won't be on autopilot once rate cuts begin and could take pauses on its rate cutting journey, just re-emphasising what I said a moment ago. So we've been saying it, middle of the year. Kate, looks like, what are you going for, April or June? I'm going June.
June is cut month. It's the beginning of the summer cuts, and we are going to get some discounts on the central bank interest rates. Well, apart from the Bank of Japan, of course. But June is where is the sales month. So that's where we're heading for all of them, I think, or at least those who show the way. Let's put it that way. It's gonna be a hot month for the majors, euro and the dollar, I guess. That's what I thought, right? End of second quarter. That's where the whole thing is. Second quarter is going to be a big quarter. Well, assuming that the Bank of Japan will still be in April, starting with the Bank of Japan, and then perhaps we have an early surprise as well with S&P. When is that? Next week or the week just right after? 21st. Also the week after next. So yeah, we are entering a big time for central banks, right? So Lagarde was isn't. Yeah, I found it funny when she said, like, she was asked about are you looking at the Fed for guidance and stuff. She says, like, no, we're completely independent. But when you hear her presser and when you listen to her presser, it's sort of an overlay of what Powell does. He starts one side of the coin and then he goes to the other side and tries to end in the middle. And that's exactly what she did yesterday. She started with a whole weaker tone, and then she said, well, he got a little bit. We are far from ready, and let's go the other way around. So that's it's exactly how they are. The two biggest central banks are now somewhere very much aligned with call it 1 or 0.75% difference, you know.
Yeah, if I had to compare the two, Fed is more, or Powell's more like a high wire walker, tightrope walker, concentration, staying in the middle. Lagarde's more of a drunk on a bicycle, trying to stay in the middle of the road when she does her speeches. All, a bit wobbly, a bit all over the shop. There's certainly differences in style between the two.
Experience, Brian, experience. Powell has how much? 20, is it not something like 20 years experience with central bank stuff, or at least 15 or more?
Lagarde was at the IMF.
Sorry?
Lagarde was at the IMF. That's
but I mean, Lagarde is a lawyer. She's not a central banker, right? By studies and stuff. So at the IMF it's a bit of a different thing, right?
Exactly.
So also what is perhaps good to say as well is that, and we have seen that in the economic data, variations in the US tend historically to be bigger than what we call the old continent, Europe. It will have changed after the pandemic, and also with adding countries over time. But we could also see a little bit of a more dynamic Fed than the ECB in some ways, if the data are supportive of that. The US economy tends to be more dynamic, so more spikes higher, more faster recessions is a big word, but faster slowing down. So there may be a bit of the nuances coming up in the second half of this year, but so far they seem to be both relatively aligned on even what they are planning to do in the number of cuts and so.
Yeah, exactly. We also forgot to I forgot to watch. We got they were talking about the pay data, and the latest numbers were out today. Came in at 4.6%. I didn't see what. It's not got it on this thing. That was something that they meant or been talking about. Obviously, wages, and Lagarde mentioned wage data coming in, and that's going to be part of formulating their decision. So yeah, that wage data came in at 4.6%. I can't remember if that's up or down, but that's still fairly hot year-on-year number. Although it has eased a bit according to headlines, but I haven't got the numbers there in front of me. Anyway, so for all the ECB waffling about cuts this morning, it hasn't done too much to euro dollar or damage to the euro dollar after hitting that high up near the 109.60s yesterday. So a little bit of easing, but not too far. So it's still keeping the bullish trend at the moment. We'll see what NFP has to do with that one. I was getting twitchy into that ECB meeting that it was going to be a dip buy. I managed to pick some up down in the 108.70s. So that's played out. I think it's going to be a similar situation for the NFP today for dollar pairs. Good news is likely to be sold into for the dollar. So we might see a dip in euro dollar again, and I might add back in. But I think that's the play. But we'll look at the NFP shortly. Coming over to some of the data from yesterday. Kate, Mexican CPI, any
slippers, slow slip lower, let's put it that way. Nothing to really write home about. Dolomex didn't move much. Mexican crosses were slightly bit even for a while, but it hasn't really done much. It's sort of as Banxico is also expecting, and I do think that they are going to be tempted to wait for Fed's guidance as well before starting to cut. Although they could, they because we are below 5%, we are holding below 5%. They also have a meeting on the 21st. That's a day after the Fed this month. I'm going to say 65% hold, and perhaps 35% they will cut a quarter, because the rest of the LATAM central banks are starting to cut. So they may be tempted to do something, so just not to keep things overly tight, but they are still around 11%. So cutting a quarter is perhaps not going to have any long-lasting effect if they would ever do it.
Yeah, thanks, mate. Further jobs data out yesterday as well. Challenger layoffs, pretty much the same as what we got last month. 84, just under 85,000 there, which is reflective of what's going on in the jobs market as well. If we start getting those into the 100Ks, that might be something a bit different. So not anything overly worrying in those numbers there. Jobless claims, again, seemingly tickety-boo. The main number doing all right. The continuing claims coming in roundabout now. It came in a little bit higher than expected, but it was in that 1.9 million. And that's where it was. I think it was 1.905 last month. I'm not sure what that revision number is there. I don't think it was that. But anyway, nothing really of note. Just we'll see if it stays in this 1.9 or keeps climbing up. But as you can see there, the jobless claims number pretty much in line with everything there. Fed's Bowman says January inflation data suggests progress in lowering inflation further, but it may be slower going forward. Says should incoming data show inflation is moving sustainably to target, it will eventually become appropriate to gradually lower the policy rate. In my view, we are not yet at that point. It says remains willing to raise policy if the data shows progress on inflation has stalled or reversed. Fed's Mester, a couple of comments one way and another, says January inflation reports were a wake-up call. And said a couple more inflation reports could give us the confidence on inflation that's needed, obviously, for them to think about cutting. She says she's considering raising her long-term Fed funds rate forecast. That's the column on the dots at the very end. They have their this year, next year, year after forecast, and then they have their longer run inflation forecast that they all give a dot for. So that's suggesting she's going to bring those dots up at the far end. Fed's Powell's on the waffle again yesterday. Nothing really different, although he did say we're not too far from confidence to cut rates. So a little bit of a concession there on this confidence that they're looking for to cut rates. That's it, unless Kay's going to give us something more. Got anything, mate?
Nah, nothing that can't wait until after the NFPs and the Canadian jobs report, mate. Please proceed.
Let's have a quick look at the NFPs before we get stuck into looking at the charts. So what's expected today? 198K expected there, call it 200 from the 353 last month. Usual caveats apply here. If it's a positive number, the market isn't going to think an awful lot of it unless it's another gangbusters like 353. So anywhere between 100 and 300 is probably a rough range. Outside of those numbers, it's a bit more bullish to the upside, a bit more bearish sub 100K. Next thing you want to be looking at really is the wages numbers. Expected to come down to 4.4%, but it's done nothing but go up the last couple of months. It's still running pretty sticky around this 4.5% mark. So that's going to be the thing to watch there. Then unemployment rate, which is expected to stay unchanged at 3.7%. As usual, match that off with the participation rate because that affects the unemployment rate or can affect the unemployment rate. If that drops, it can mean that the unemployment rate drops. If that goes up, it can mean that the unemployment rate goes up. If that stays steady, then the change in unemployment is a bit more real, if you like. So keep an eye on that one there. That's how we judge it. So look at everything overall. Start with the headline. If the headline's nothing, if it's in line, move quickly over to the wages and the unemployment rate and participation rate. It's also double bubble CAD jobs. So you loony traders need to be on your toes because we're going to get the revolving door switched on from those guys. We'll see, obviously, the main number, the employment change, and then whether it went in full-time, part-time, or whatever. Again, similar situation with the unemployment rate and the participation rate over here as well. I think we also get some wages numbers there as well, not as closely watched, but just keep an eye on those for a bit of pressure there. But I think the main focus is going to be obviously on the US jobs with the BOC in a nice place. But we've got a bit of dollar volatility at the moment. So the Canadian data is going to affect dollar CAD. Keep an eye on that one because it can be a bit of a counter. So if this is good and this is good, then dollar CAD is likely to rise on the US side of things. But you can get a bit of an opportunity here. Let's say the US numbers are really, really good. And these numbers are really, really good. It might see dollar CAD dipping while every other dollar pair is going higher. So there's sometimes just a little bit of disparity that can come in between these numbers. So look at the overall dollar trend, see what dollar CAD's doing, because it may be a bit of a counter trade to look at. That's the way I look at trading between both numbers. But anyway, Kay, you got any thoughts, expectations for this one?
Yeah, going in a bit in reverse. If you really want to trade the Canadian job number and but want to avoid the dollars, crosses are always an option, right? It's something that I would rather like to do, unless of course you get numbers confirming. Let's just say, for example, good Canadian numbers and bad US numbers. The cat will likely dump really fast. But yeah, crosses are an option, and there's a few that we could trade today. As far as expectations go, on the Canadian data, it's always a bit of a lottery, right? We don't really know, especially that balance between full and part-time is always a bit well, I mean, we can't stick a number on it. We can't have a fair idea of what's going to come out. So that's always a bit of a lottery. Yeah, the US data. I'd say it's, as I said in the room, look at the full report. It's not only what's happening on the non-farm payrolls. The wages, of course, are going to have an importance. Oh, by the way, talking about those wages, those Q4 wages that came out of Euroland. Well, you said it was 4.6, Ryan. They came on the back of a 5.3 in Q3.
Okay, thanks. They were down a bit. Yeah, thanks, mate.
Okay. So yeah, we are going to have to look at the full report there. As well the wages as the participation rate, as Ryan already said. It's the question is, are we finally going to see a slowdown? On the wages, I would say if we saw the labor cost unit come off, right? And that may be a small indication of those average hourly earnings, perhaps. But the fact is, if we look across the markets, the market is going into the data with a quite bearish dollar view, right? Yesterday, after the ECB, euro finally broke loose as well, but the others were already on the move, and that's the mood the market is going into the jobs report with. Yeah, things like, well, in particular, cable have been rallying quite well. The antipodians have taken off. Dollar Swiss is actually trading relatively heavy as well right now. We are on a little bit of intermediate support right here. It's, in my opinion, it's going to have to be one hell of a report to really reverse all of it. So we could have a bit of a dollar knee-jerk reaction if we come out with a 250 print or so, and the rest remaining relatively unchanged. But whether it's going to hold, I'm in the same boat. People in the room know I'm still, well, I've taken a fair bit off because ahead of those jobs report, it's better to be reasonable. But long cable, long Aussie dollar, and that's doing pretty well. And I see Angela was in the same position, and also in the Kiwi. That's a very nice one. And you were in the dollar yen as well. So that was cool. You must have had a pretty good 24 hours there, Angela. Well done. Yeah, so that's the thing, and we will look at it in the levels, but yeah, there's some relatively clear levels coming up if we get a pretty decent report. And I'm a little afraid that if we get a bad report, it's going to be a bloody Friday for the dollar.
Yeah, that could well be the case. Then we'll probably slam in some profit taking late in the day. Ali Durej, just want to address your comments here in the chat room. Right, first and foremost, we're absolutely very happy to hear your trades, hear what you're looking at, your ideas, your views. We're happy to comment on those. We're happy to give advice where we can. Obviously not investment advice or anything like that. But you have to also acknowledge that sometimes we have time constraints if there's a lot going on. So sometimes we might not be able to get through every single one of your trades, Ali, but we don't mind having a look now and again because we're all looking at the similar things, and that's the good thing about community. We all get opinions, share opinions, we all learn from each other. It's not I learn just as much from K-Man and all the people in our room as I try to give to our community as well. So it's all a positive cycle in this game when it comes to being in a community. Everyone learning off of everyone else. I'm not too proud to say when I'm wrong. I'm not too proud to be wrong, because there's no pride in trading. You don't need pride in trading. But yeah, you know, Ali, you do put a lot in here, and it is very much appreciated. And as I say, if we can get round to it, through some of it, all of it, we will do. But don't be disheartened if we can't get through it all the time, if we've got other stuff to look at and other people who want to put their stuff up. You know, Derez, you like to look at gold a lot, and we're happy to oblige. So yeah, put your stuff up here. It's always welcome. But understand, sometimes we may get through it, sometimes we may not, depending on what's going on each and every day. But we do want your input. I hate it when I come on here, do the show, and there's 5 comments all in 45 minutes. I'm a talker, and I'm answering questions, so I like conversation. So keep it up, guys, and don't worry if it gets too much. K-Man will tell you off. I'm passing the buck to you, mate. You can be the
I'm the bad cop.
Bad cop. I'll be the good cop. You can be the bad cop.
Can we do even an uneven days for that then?
Yeah. Okay. Any day ending in Y, you can take, mate.
All right. Okay. Anything ending in day, it's for you then.
Yeah, exactly. Right. Let's have a look what's going on. Already spoken about euro dollar. It's pretty clear the levels. Just quickly, we had this break area. 109, 109, 17, 15, the fib here. So that's our immediate support point really from this, and 109, 16 into the 61.8 fib zone up here is our resistance. So those are your levels to look at over the NFP, although it is pretty close to the price. So if we do have a little bust through, look at some of the extended ranges. 110 is obviously going to be the number up top. 108, 78 is down here. Is going to be the big support point to watch if we get down there. Dollar yen, yeah, I want a 5 million NFP. I want a rally to sell, but that's very wishful thinking. We have hit a decent support area. The 147 level is a big old historical level. Needs a bit of respect paid to it. It's also close to the 38.2 fib of this whole move so far this year. So if you're going to run into a bit of traffic somewhere on a big move, data-driven, headline-driven move, then this is a sort of area. So this is going to be your watch point. I think where we close today on this level is going to be important. If we close below, then we're probably going to be heading down towards the 145s. Close above, then maybe we're just going to see a bit of consolidation just until the next headline, or we get to the next week's 13th date and all those wage stuff going on. But it's a rally sell, clear as the nose on your face for the moment. So if you do get a decent NFP, it's probably going to find a lot of people coming in and hitting it pretty hard. But you know your levels going in. It's a day or week of breaks. We spent weeks sitting in these ranges trying to trade the edges, and then all of a sudden, boom, you get the breaks. And technically, it's done its perfection job. Break of 128, holding 128, pushing on higher through the prior highs that we had up here. So we're off to the races in cable. Where can it go from here? Well, everyone's going to be talking about 130 naturally, but we do have a bit of traffic, 128.5. So that's the next level to watch in this one. And then we've got various bits and bobs, 129s. Likely, as cable tends to do, we're going to play the 50s and double O's game in this one. So your main resistance points are going to be, you know, as I say, 128.50, 129, 129.50, 130 for that. Downside, I think probably 127 is going to be the level to watch if we get a dip. Sorry?
127.20.
Okay, I'm not going to argue 20 pips over you. But low 127.
Not on a Friday, not with me.
Yeah, low 127s, and then we're both happy with that. Yeah, that's probably going to be the sort of area you're going to look at on a strong number. Again, I'm going to think that the dollar, any dollar bounce is going to get hit pretty hard. All right, rally sellers. Dollar CAD you might as well look at as well. That's carved through a bit of a level. My main level is really not down until the 133s, the low 133s. So again, we've got a bit of traffic around the 134, 133.90 area. A few little points all the way down as well, but the bigger level is down 133s, and even if it's a big report, we might even get a move down to 132s, which will look pretty juicy down at these prior lows here. But I think that's probably a road too far for now. Top side again, probably going to get hammered if it gets anywhere up towards 135, 135 and a half. An absolute gift might be something up near 136 for that one. Quick look at stocks, and then I'll hand it over to the maestro, if I can find them. This one showing absolutely no signs of stopping for now. Had to break, broke the prior high, had a little bit of a mooch down. There's a bit of vol coming in here, so the levels still need to be a bit defined for my liking, but we're largely holding the break point. 51's the last prior high now, so we're still inching new highs when we move up, so it's keeping the move going. Where's the top? No idea. I'll have to let the price action define it, but it's certainly not doing an awful lot at the moment to suggest that we're going to find a top anytime soon, but one will come eventually. So all these little levels in between need further definition. This one is still your main number here. So depending on what happens on the NFP, any dips down to this level, this will be the key level, 50-50, 50-40. If we hold that again, keeps the rally going, and then we may get a bit of action, a bit of range playing in that area. But for now, there's no stopping this one. But watch for maybe a little type of blow-off move like we had here when we first came up to this area. We had that little move, Monday, just sort of a week ago, just sort of took the top off, and then we had that dip down. So look for something like that over the data. If you get a bit of a blow up, quick move, to 52s or something, then maybe we get a bit of a shakeout after that, bit of profit taking. But as I said, there's no signs of this stopping for now. I'm continuing to run my longs and take little nips off here and there, and until I run out, either get stopped on my trailer or until I run out of slices to do. So that one keeps going. Okay, what's floating your boat for today's data and everything else?
Yeah, okay. Okay, I need to have a quick look back at the cable because I'm in there, and I just wanted to show the one that I showed already a couple of times on the show here, and the one that I was showing on the chat in our chat room as well. This triangle is clearly broken, right? And then we had a bit of a retest of it, and then we took off. I think for the more medium term now, this 127, and I'm going to give the 127 to Ryan as well. This 127 figure 20 is going to be, it's your new 125 and a quarter, and it's your new 125 and a quarter. Then it became 126, remember? And I think now it's gone up another big figure here. So that's going to be the big zone. But in between, we already have, I think, just around 128, 127.90, then another one around 127.60. So if we do get a better report, have a look at how it reacts around those levels. If we already stop on the first, or I would even say the second level, without going back to this, and then we stop here, and then we start to move higher, that means it's likely going to come back. So for me, yeah, 128.5, 129.10, bit of an extension level, and then we're talking about close to here, 130, and another extension level around 130.17. If it's really a bad report, I wouldn't even rule out to print 130 today. It's cable. It can go very, very fast, all right? So that for that one. The other ones I want to look at today and come back on it is the Aussie dollar. Again, Angela, very, very nice trade. So we've had the break of our 66 figure 10. We came to 66.40. I took some off ahead of it this morning again. So my position is now a lot smaller than the initial one where I bought this break here. But I'm keeping some in and see what the reaction will be already at 66 if we would get a better report. Get a bad NFP this afternoon. It's usually a bit counterintuitive to do Aussie if you get a bad economic data somewhere, because Aussie is a bit of a risk currency. But I mean, stocks will probably continue to fly, at least initially, unless it's a really damaging, very, very bad economic report, because there's always a balancing point, right? Or a point of no return. Imagine we are getting a really bad report that in turn may make the market think that there's something really starting to go wrong in the US, and be careful then, because then we could have adverse reactions. That is, stocks during the initial move higher and then actually collapse. So be a bit careful of how this report is really going to come out. But assuming that we get a bit of a miss, but without being a very big drama, this thing looks set to go. Perhaps have a look into this next traffic area, somewhere between 67, call it 67 figure a quarter. That zone is very possible. If you start to trade back below 66, and then we have to look perhaps at crosses as well. But if we start to get back below 66, I reckon the 65.70 is already going to show up this level before, of course, this big zone again, which was the break finally, and we went up. So this is going to be the support zone in the low 65s, okay, the major one. This is your new 127, I think, in cable. And Kiwi as well. It's trying to break free above 61.75 here, but I would rather still watch this whole zone 61.40 to 61.65. See what happens if we get a little bit of a better report. Coming back in here, your 61.40 is where I would look at what's happening in the Kiwi. Of course, if we get like a real bumper report, it could go down to low 61s or even high 60s, right? But I'd say first zone here is this. If we get a bit of a weaker one, looking at the mood that this market is in right now, happy to sell dollars because the yields are coming off as well. I think a move into the half 62s is possible here as well. All right. What else? Yeah, I'd like to look at a few crosses just quickly. This one, euro sterling, is finally, and I'm just taking euro sterling as an example for what happened on the euro crosses as well yesterday, because yes, we've had dollar sellers. Yes, we've had Lagarde pushing us to June, which is not too different from what Powell is telling. We've had a bit of a spike higher in sympathy on most of the crosses, and now we're starting to see lower crosses. I think that reflects, and if you look at Euro Aussie, Euro Kiwi, Euro Canada even, but Euro Canada hasn't moved that much. But you look at Euro Swiss, for instance, all those Euro crosses are coming off this morning, and I think that's a bit the uncertainty that remains in the European revival, if you want, that is still hanging in the market. So going back to the euro dollar may be your slower mover if on these afternoon numbers, which we often see when there is such a kind of a mood in the euro crosses. So this one has come off. We're finding again bids around and below 85.20 on euro sterling. So we still need to respect this little zone here before we can dream about a test of 85, the figure 84.90 again. Okay, but it is looking that we are finding offers again. Yesterday we had a quick peak back above 85.5, but that got rejected. So this is one that I'm actually in. I'm actually in a little bit, but my main position in sterling right now is sterling Swiss. I think if the euro isn't one that you can have, the sterling Swiss maybe. But we still need to overcome this zone here, as I was saying, this 112.75 to go and have a look at 114 in this pair, and that could happen into the S&P perhaps later this month. Ryan, I've taken enough time of everybody. We need to get ready for doing our hair, putting our costume on for the NFPs. Yeah.
Yeah, getting the makeup on, certainly. Thank you very much, mate, for that today, and obviously for all the week as well. Been very useful for everybody, I hope, I trust. Yeah, we're going to call it a day. That's it. The week is nearly over. Trade well through the latter part of the day. Don't blow up any good pips you made this week on gambling on one number later on. So you've had a good week. Switch your machine off. Just sit back, grab the popcorn, and let everyone else fight over it. Thank you. Yeah, go on, mate.
Yeah, I didn't see the rich question. Sterling yen 188.65, 188.25, mate. That's the two levels here on the downside to watch. And that's it. Have a good weekend, everybody. Trade safely over the NFP. Thanks very much for being with us.
Yeah, echoed, mate. Thank you all. We'll see you all next week. Cheers, folks.